Hey Dave, how you doing today?
I am doing great, Nick. How are you?
Doing well. Welcome back.
Welcome back. It's good to be back. Looks like I missed a lot.
Yeah, well,
Yeah,
if you let Cole and I take over, Lord only knows
I,
what's going to happen. So,
I love it. I love to be redundant.
today's episode, looking forward, is talking about one of our personal favorites, Mr. Warren Buffett, and how he is making the news lately.
Yeah. There's two things I like about this. One is we get to talk about Warren Buffett, and two is this actually came from a couple of client questions after reading an article in the Wall Street Journal, and it was also just generally online. I saw it in a couple different places last week. So, what's Mr. Buffett up to?
Yeah, well, I guess when you are widely considered the greatest investor of all time, what you do with your portfolio that is public information can
Yeah,
tend to churn out some headlines. And
gets people's
so
attention.
it
Yeah,
sure does.
yeah.
Last week, what we saw in the Wall Street Journal, among other places, is an article titled, "Does Warren Buffett Know Something That We Don't?" Which was talking about his current cash levels. Which, and what I
Hmm.
love about Buffett too is, you know, like when you start talking about some of the numbers of like, well, he's got $365 billion in cash now. Well, he's also got
Right,
$1 trillion company, so it's not like
right, right, right.
it's not like
We
he's
were gonna get it.
100% in
Yeah, yeah,
cash.
yeah. Getting ahead of ourselves here a little bit, but yeah, it's yeah. Um, and so for context, part of this is that right before the financial crisis, he was selling stock and putting cash on the sidelines.
Right.
And it proved very prescient because then he was able to be a buyer of some big time, valuable but distressed companies during the financial crisis that were very good returns on investment for Berkshire Hathaway. And the patriot in me always wants to applaud him for standing up and providing some much needed capital when our markets and our economy needed
Right.
it, and a boost of confidence at the same time.
Right.
So
Yeah.
so is he selling because he thinks there's another financial crisis on the way? Well, Warren's not saying.
Right.
Yeah, and he really can't say for a few
Yeah.
reasons. But so he sold. His company was a big shareholder in Apple, and he sold
Hmm.
a lot of Apple stock lately.
Yep.
A big shareholder in Bank of America, sold a lot of Bank of America shares. Those were some of the ones he picked up during the financial crisis, no doubt.
Right.
Um, so what does all this mean? And what do we as financial advisors and individuals managing our own retirement portfolios do?
Right. Exactly. Is this the sign of things to come? Is it something that should even like hit on our radar?
Yeah.
It's interesting, and the other thing about kind of, and I'm sure we'll get into this a little bit later too, but the game has kind of changed for him as
Hmm.
well with how big his company is, right? Like
Right.
he's long been hailed as this great investor because, and he has, long-term track record of being
Hmm.
a long-term investor that's being able to beat the market in some cases over long periods of time, even double the
Yes.
returns of the market. And one of the interesting things is, he's long said like, hey, if I had a small portfolio of a couple $1 million, I could do this pretty easily. But
Right.
that's not where he
Right.
exists right now, right?
Right. And mutual fund managers and mutual fund analysts will tell you that's very true too. The bigger a fund gets, the harder it is because to add an incremental little bit to your performance, you need a bigger piece of another it
Right.
takes that much more to move your bottom line. And so yeah, that's part of it for sure. He can't tell us why he's selling, and we should preface, if he's selling stock because he wants to buy something else, if he even hints at that, any company out there that people think is a potential Berkshire Hathaway takeover target is going to jump in price. right?
Right. Yeah.
And so he can't say that. And back to him, him being at least somewhat patriotic, he's not going to come out and say, well, yeah, there's another financial crisis coming, because if he even said that, if he even like raised his eyebrows wrong when he was asked the question, he would
Right.
cause that financial crisis.
Right.
so
Exactly.
so he can't tell us what he's up to. I think the obvious answer is the simplest, as I think that's Occam's razor would tell us. He's always been a value investor. And a
Yep.
value investor is looking at companies and trying to find companies whose stock price is low relative to their potential growth, right? Potential earnings
Yep.
growth. And the market's done really, really well since the COVID crisis crash. And valuations compared to historic norms, stock prices are high relative to their earnings. So a
Right.
value investor that doesn't want to take a leap at a high flying tech company is likely to say, you know what, I'll just put my money in some treasuries here and wait my time.
Right.
Doesn't mean the market's going to crash.
Right.
I mean, that's one way valuations get lower, but it can also be that certain companies drop in price, certain companies don't. It can mean a period of underperformance for the market, which is what we would expect when valuations are high, right?
Mm-hmm. Mm-hmm.
Um, if the market does better than average for a while, it's probably going to do lower than average for a while because those long term averages tend to hold true.
Right.
So I think to me, that's like the simple, obvious answer is he just doesn't see anything he wants to buy right now.
Right. Especially as it's compared to like what he can get sitting in treasuries. Not
Right. Right.
right.
Well, and the Wall Street Journal had an interesting note in the article that, if you or I see a stock that we think is undervalued, we can just go right on the market and buy like 100 shares of
Right.
XYZ, right?
Yeah.
Warren Buffett, for him to do that in a meaningful way for Berkshire Hathaway, has to buy almost all of the company.
Right.
And you can't just go on the market. Like I couldn't go on the market and buy all of the available shares of a particular company without moving the price.
Right.
Warren Buffett, Berkshire Hathaway would pay 20%, they estimated, over whatever the stock price that you see is to buy all of any one company.
Right.
So it just compounds that idea that there's just not a lot of value for him to pick up right now.
Yeah. Unlike you and I, Warren Buffett can't go to E Trade and just press a couple
Right.
buttons to
Well,
buy
he
some
could.
shares.
He could.
He
He
could-
could.
it would, but
But
it'd just be a
buying it,
rounding error.
right, right. Not even a rounding error. It would be like, why did you waste your time doing this? Um, but yeah, yeah. So exactly. And then when you factor in that interest rates are higher now and Treasury returns are higher. That's always a thing with when interest rates are higher, stock taking risk in stocks doesn't look as attractive.
Right.
So that's an important thing to remember too. Another simple possible explanation, he bought Apple when Apple was cheap,
Yeah.
and now it's time to take some profits. He
Right.
bought Bank of
Yeah.
America during the financial crisis. Now it's time to take some profits. We do
Hmm.
that. Clients do that. When Warren Buffett does it, people think the world's coming to an end.
Yeah, and it's interesting. In one of the, I think it was a podcast I was listening to. There was some talk about potentially like taking profits and paying
Hmm.
taxes now as opposed to like future. Like obviously that's a little bit speculative of what might happen
Hmm.
to tax rates and things like that in the future, and it doesn't seem like something that he would do. But it is, one of those things. Like you said, we're not in his mind. We can't, this is all
Right.
speculation.
Right.
But there's a lot of different factors of why he might want to do that. Not only
Right.
profits, but also how taxes play into it.
Well, and along those lines, he's 94 years old.
Yep.
And so there's two things to think about there. One is what he does is a lot of work,
Yeah.
to do the kind of analysis, and it's not that I don't have any doubt that he could do it, but maybe he just doesn't want to right now.
Right.
I'm not quite 94, but there are things that I don't have quite the excitement about that I did 15, 20 years ago.
Yeah.
So that's one factor. The other thing, what do most older Americans do with their portfolios? They get a little more conservative,
Yeah.
whether they need to or not.
Right.
You know,
Very true.
it's pretty typical, for a
Hmm.
94-year-old's portfolio to be more conservative than a 40-year-old's.
Yeah.
So, it may not be like some big macroeconomic statement. It could just be, hey, I'm 94 years old.
Right.
Maybe he's going to give some of that money away. Maybe he couldn't give it as shares for whatever. I don't know. I don't want to speculate, but there's a lot of other possibilities there, right?
Yeah, one thing that we haven't talked about either is his good friend and partner Charlie Munger died not that long ago, and
Hmm.
so like, how does that affect the decision making, or
Right.
whether or not he pulls the trigger on certain deals and things like that too.
Yeah,
Like,
yeah. It could be as simple as he knows it's time to get out of a certain stocks, but he's going to let his successor make the decisions on where that money's going to go, and he's not quite ready to just hand it over to him yet.
yeah,
There could be there could be a lot of psychology involved in that. So,
right, yeah,
um, just from a simple like portfolio management idea too, when you're buying a whole company, we talked a little bit about this already, but that's not the same as you or me going in and buying ETFs or mutual funds for our clients, where you're buying like broad diversified swaths of the market. We don't like
hmm,
anybody to really buy individual stocks if they don't have to, because it's more work and it's harder
yeah.
and more things can go wrong.
And I think it's one of those things where we look at him as this great investor, which he absolutely is, but also like, he doesn't need any of this money,
Right.
right?
Yeah.
Like, like, if he sat it in cash for 2 or 3 years and he was completely wrong and the market kept going up, like,
He'll
that
still
doesn't
be
affect him at all, right?
right, right, right. And back to like managing everyday portfolios. So most of our clients are somewhere around retirement, either pretty close to retirement or already in retirement. And what do they own? Usually a lot of bonds to go with their stocks,
Right,
right? And what is Warren Buffett buying when he's selling these stocks? He's buying bonds. He's just getting like to a client that asked me this question. It was like, well, in one way, you're ahead of him, right? You've been
right.
40% bonds for a few years. He's
Yeah,
going from $1 trillion in. Oh, I think the market cap of Berkshire Hathaway is $1 trillion,
yeah, somewhere
and
around there. Yeah,
he's putting 325 billion, which is a lot, but it still is like a third, of what his company's worth into bonds. Okay,
right.
how do you argue with that, really?
Yeah, yeah, for
So,
sure.
he still has billions invested in the stock market.
Yeah, and I think, you and I talked about it before this as well, but I mean, the most important thing is he's not playing the same game that
Right.
you and I or any of the retirees are. And so, what works for him in this situation, or what he's trying to do, isn't going
Yeah.
to work for the everyday retiree who's actually looking to take income from their portfolio. Like, he has none of those
Yeah.
concerns. Like, he has no income needs out of Berkshire Hathaway. Everything
Right.
he needs, he already has more than enough of. And this is just kind of like, I assume, a fun way for him to spend out the
Yeah.
remaining
Yeah.
days of his life, is to see what he can, what kind of deals he can get, what kind of
Yeah.
what kind of big ticket items he can buy in
Yeah.
terms of stocks and deals he can make and money that he can make. It has
Yeah.
nothing to do with whether or not he's going to have enough money or run out of money or any of those things,
Exactly.
right? And
Exactly.
so you and I, I guess the one thing that in the Wall Street Journal podcast that kind of rang true to me was, the one thing that we can probably take away from this is to just kind of temper our expectations of what the market might be over the next
Hmm.
couple of years. Because if there were, great buying opportunities and he felt good about it, he's probably not in
Yeah.
cash. Doesn't
Yeah.
mean that he knows
Well,
all the answers, but it does potentially mean that we might not get the same returns that we've become used to.
and building on that, it's one more data point along that
Hmm.
spectrum. It doesn't mean like if it just existed in a vacuum, it doesn't really mean much either way. But when we consider high valuations, higher interest rates, potential changes to the regulatory and tax climate and different things, there's some risks out there, and yeah, it's really hard to say, but that's always true too.
Right. Yeah.
Would I rather hear Warren Buffett as a buyer than a seller? Yes.
Yeah.
But I'd also rather hear that, for 2 years we had an inverted yield curve to worry about, and war in Ukraine, and, inflation. These are all just data points.
Right. Well, and typically when he's a big buyer, like we talked about, it's because some bad things just
Yeah.
happened.
Right.
So,
Right. Be careful what you wish for. Right.
yeah,
Yeah. Yeah. Yeah.
exactly.
If
So,
there is a crash, he will be happy to buy your stock from you.
yeah, yeah.
That's
But on itself, it is in the news. It is out there.
Mhm.
325 billion is a big word to throw around, and you can run lots of headlines with that.
Yeah.
But keep in mind, that's not the end all be all. It probably doesn't mean a whole lot for you, and you probably can't take a whole lot away from it,
Right.
other than the fact that he's planning on doing something that
Right.
nobody really knows what it is.
Right. I wouldn't necessarily bet against Warren Buffett, but I'm not always gonna, take the what do they call those in gambling? The side bets,
Right? Yeah,
Yeah.
for
Um,
sure.
so and I guess lastly, like I would never like he's obviously a legend in the field, but he's not always been right either. And he'll be
Correct.
the first to tell you. Like the press and other it doesn't necessarily bring out some of the some of his less valuable moves,
Mm-hmm.
but he's made
Mm-hmm.
some pretty bad calls on interest rates and currencies and things that have gone against him, just like any other person who's done what he does long enough.
For sure. Yep.
So,
Oil prices. I mean, there's been a lot. There's a
mhm.
long history. We don't typically see those in the
Yeah,
news because we want to
yeah,
focus on what he did and the value he created. But they're out there, right?
yeah, yeah. And again, I wouldn't fault him, but I think he'd be the first to tell you that not every call has been a good one.
Yeah. Well, and if you play the
So,
game like he does, you're bound
yeah,
to get some stinkers, right?
yep,
It's just how it
yep.
goes. So,
So we'll see how it plays out, but that's just another thing to watch.
indeed. As always, been a pleasure, Dave.
It's fun.
Listeners, if you have any questions about this or other topics, we'd be happy to hear from you. Shoot us an email at info@srbadvisors.com. Until next time, Dave.
Thanks, Nick.
This is a Zedia Media production.